All righty, so recording is going and I'll do the doorbells and stuff. Thank you folks, everybody for joining. My name is Pat Gage and I'm the host of the Commercial Real Estate Investing Mastermind. We hold bi-weekly here at this station and this time. I would like to say thank you very much for everybody who's giving up your evening. I know it's summertime and it's 75 degrees here in Michigan and sunny, so I appreciate you. I know that you won't be disappointed as far as information and knowledge from our guest here, Becca. She's going to inspire us and we're going to be looking at hotels and motels a little bit differently once she gets done, I think, tonight. So I'd like to say the mission of this group is to give you the confidence to do your first deal. Networking is encouraged in these groups here. You're going to meet your sponsors, you're going to meet your loan people, you're going to meet your partners on these calls. So please put your information in the chat. And once the call is done, I'll send out the chat log with a link to the recording of this video. So they'll have that as well. But put in the chat log, your name, what you're looking for, what you can help people with, what you're looking for, what you can bring to the table, such like that. Because again, we share that because that's the whole point of these masterminds is getting out and getting and connecting with people and doing it that way. So definitely take advantage of that because I will make that available probably by Friday, right? I'm sorry, probably be Saturday by the time I get the recording out because I am out of town on Friday. So but with that being said, put them in there, get it in there, and then we'll get it to you. And I'll show you at the end how to save the whole chat to your hard drive as well, too. So, all righty. Well, we're going to get started here because Becca, my guest, the person on screen here, has been helping investors, giving back, first and foremost is important to her. She's giving a portion of the returns to a charitable foundation. Now she's been in real estate for over 10 years, and she's got a varied track record. She's got condos, she's done multifamily, she started in residential, and now she's kind of, still multifamily, but kind of a creative twist to it, right? Something where I didn't really think about, and it's kind of in the circles is kind of getting a little bit more popularity of actually taking a hotel, a branded hotel, and purchasing it and turning it into multifamily apartments. And I've seen some pictures of what she shared with me, and I'm like, wow, that's pretty impressive of how they've done it. Now they haven't finished yet; they're still in their business plan. So, but what she's going to do is she's going to cover how she found it, how the team put together, stuff like that, and then afterwards we'll have plenty of time for questions. So please don't worry about that. So with that being said, I'm going to turn it over and have you guys you didn't come to hear me talk. So I'm going to turn it over to Becca and have her continue the story and fill in the blanks that I missed out. So welcome, Becca. Thank you very much for joining.
Thank you, Pat. Thank you for the introduction. And thanks so much for inviting me to your meetup. I see some familiar faces and I see some new faces. So it'll be wonderful to get to know some new people. And I'm delighted to share with you this new creative way of investing. Do you want to turn the screen over to me, Pat?
I just did because I forgot you were supposed to do that. So yes, the screen is yours.
All right. Well.
See, this is a person that comes prepared. This is a true next class investor, right? My PowerPoint's my yellow pad sitting next. Look at she's already got it all. This is high tech here. Goodness gracious.
I'm trying to deprogram all that corporate training of the past. So, but there's a reason I have a virtual background because there's Post-it notes stuck all over my walls.
Hey, whatever works.
All right, folks. Again, my name is Becca Hintergardt. Here's a quick 1-2 about me. Whoops. I live in the San Francisco Bay Area. I got a business degree, bachelor's degree in business. And I've spent the majority of my career, about 17 years, as a medical device sales rep. I'm having technical difficulties here. I need my 10-year-old in here to help me.
long as you feed them afterwards, we have to.
They're hungry already. Yeah, so I sold CT scanners for a Fortune 500 company. And if any of you have probably had a CT scan in your life, those are large machines. And it was a great job, did very well, worked very hard, did my best, everything that our parents have taught us. But there was an inherent problem in this, in that it was not passive at all. I mean, at all. It was the farthest thing from passive. CT scanners are purchased about every 7 to 10 years from a hospital. So literally the moment I would close a sale, I would lose my best customer for 7 years. So that's quite problematic. I had 2 kids and I realized this was not a sustainable life with a 3-state territory, even though one of the states was Hawaii, and that part was pretty good for a sales territory, but the rest, not so much. Then I entered into an age of enlightenment and started read Rich Dad, Poor Dad. Think Big was a game changer for me. I followed some of the Dave Lindahl for a while with his emerging markets, and I realized I needed to really shape my life into more of a passive income stream rather than hyperactive as it was in medical device sales. So that's how my journey began. I started out with a duplex in San Francisco. This was a 110-year-old Victorian building in San Francisco. The only one to bid on it was myself and a contractor. And that should have been a warning sign right there. Good old San Francisco, especially as I was a single girl and didn't even own a hammer. And good old San Francisco, everything shakes, rattles, and rolls out here. So houses are a little bit crooked. This home was moved across the street from eminent domain. The city decided they wanted to build a school. So this duplex was put on a truck, shipped across the street, which made it very difficult to renovate because it was about 2 inches difference from right to left. So when you're standing in buildings like this, you have to hang your pictures 2 inches crooked on one side to have it straight.
Oh, yeah. California, you guys have got all the cool things.
Oh, it's just crazy as can be. That was a great project, though. A lot learned there, and that was my proof statement of passive income. That was a house hack, so I lived in one unit, renovated upstairs, and lived downstairs, and vice versa. Then I went on and got a 12-unit in Kansas City. This was a good deal, bought on a short sale. This was somewhat of a speculation play. It was good while it was good, and I learned quite a bit in that property. A lot was learned there. Essentially, just because you hired a manager doesn't mean it's going to go smoothly. You must manage the manager. As a speculation play, I believed in this area. It was 1 block away from a great area. 1 block, the path of progress only needed to move. I was on a women's call in a women's real estate investing meetup, and one of the gals is bidding on my property that I owned in Kansas City. And it is 4 times the price of what I paid. So my speculative play was, in my 1 to 5 years of hold, it would go up, but it happened in the 5 to 10 year after I got rid of it. So speculation is a timing game there. And I'm still a passive investor in a 149 unit in Longview, Texas. But the most interesting project, which you all want to hear about and are here to hear about, is the 100-unit Quality Inn motel to multifamily conversion in Sierra Vista, Arizona. I see some Arizona folks on this call too. Looking at you, Alicia. Nice to see you. So a few things to talk about today, folks. Why a hotel conversion? Why now? Why would you want to do that? How would you identify an opportunity like that? I'll give you a case study, which is ours, and we'll open it up for Q&A. Pat, would you prefer everybody saves their questions for the end, did you say?
Yeah, let's try that.
Or would you prefer conversation?
I don't want to interrupt your flow, but that would be great.
Okay. Okay, great. That's just fine. Just let me know if it seems like I'm talking to myself sometimes, you know. But that's a good idea because a lot of the questions are addressed through the presentation that you would have
I'm
during it
sure they
anyway.
are. This looks, like I said, this is
So
very
here,
professional. This is, you set the bar too high here, Becca. That they're going to expect this every week now. This is,
don't be fooled. I'm wearing my bunny slippers, Pat.
okay, there you go. There
And
you
it's
go.
chaos behind me with hungry children. Don't give me too much credit. Well, folks, the hotel apocalypse is here. By the end of 2021, 35% of small hotels and motels will be in financial distress. On top of this, those that follow this industry estimate values to go down another 20 to 30% by the end of the year. It will vary on the brand, it will vary on the market and the asset type, but this is something to watch. The opportunity is certainly now. Lodging fundamentals go for about a 5.5-year cycle. So we have 3 years left on that, which puts us to 2024. These opportunities will still be available.
Can I, let me clarify. What does that mean, I guess, when you said that?
That means the cycle of when they think things will rebound again in the hotel sector.
There's
And
three experts are saying 5 years or 3 more years from today.
3 more years from today, because this area has been hemorrhaging for a while. Airbnb has knocked a lot of hotels on their side, Airbnb and VRBO.
Okay.
It's been stressing for a while. And COVID has just tanked this industry. Not entirely, not all brands, but many. Things like your Days Inn, your Quality Inn, your Motel 6s. Other brands have deeper pockets, like your West Inn and some of the other large hotels. But the large majority of small hotel motels are family owned, mom and pops, and they just don't have the deep pockets to withstand this, the vacancies in this pandemic.
Thank you for clarifying.
You betcha. Thanks for asking. Well, many options for repurposing hotels, and this is what I like. Things really get fun here. This is not your run-of-the-mill multifamily play here. So many things you can do with hotels. One of them, workforce housing. You can acquire hotels for a fraction of the price that you would a multifamily. Granted, they're heavy lifts, and we'll go into that. But you can acquire these for less than replacement cost in most cases. So a workforce housing play is a very good one for these. Also, affordable housing, new construction, as we all know, when builders build, they build A-class properties and to get the most bang for their buck. So there's a definite need for affordable housing. Senior housing, I've seen several hotels do the senior housing play, and we have a lot of baby boomers that are downsizing. And the senior housing market has a lot of high demand. There's a number of hotels turned into senior housing that I have seen. And they're perfectly set up for it if you think about it, because they have the downstairs eating area. You know, that kind of area where you check in, and they often have a little brunch area, which is perfect for the seniors. Low-income housing is another play on this for crowded cities that lack low-income housing. Homeless shelters here in the Bay Area, San Francisco and Oakland just turned 2 to 3 hotels, I think the third one's in the process, to homeless shelters. There's also the play of Schwanky Studios in downtown Austin. There's a company called NU, N-U, that's out there. It's a huge company, big pockets, these big players, these guys. But they've turned the hotels into Schwanky Studios for millennials in downtown Austin. So lots of things you can do. There's also value plays here that are not available in certain markets. Okay, so hear me out on this one. For those of you that are in expensive cities and rent control markets, like New York City, there's 5 rent control states currently, right? San Francisco, or California, Oregon, Maryland, New York, New Jersey. In these markets, how rent control works in San Francisco, or rather California, for example, the state sets the bar, which is 5%. Then you can increase the rent based on the consumer price index of that county. So where I'm at, you can increase the rent 9%. So 5% plus the 4 consumer price index. Statewide, 10% is the max. So that's not bad because you underwrite multifamilies at 3% rent increase.
Mm-hmm. Yeah.
Except the problem is you inherit tenants at a very low price, at a very low rent. You can have tenants in some of these rent control markets that are in 2-bedroom apartments that should be $4,000 a month, but instead are $1,000. So if you can only raise the rent 10% on them, it's going to take you a lifetime to even catch up, be at the market price.
Gotcha.
This is the challenge of cities. Certain very oppressive rent control cities like San Francisco, you can only raise the rent about 2%. Doesn't even index with inflation. It's one of the most suffocating rent control cities probably in the nation. Well, so multifamily in a lot of these places, you think, well, why would you bother? But because of hotels, these are 30-day leases. So they're not subject to rent control. So you can get a hotel in San Francisco entirely vacant, bring it up by doing all your value add, bring it up to market rents and sell it in a market where multifamily apartments that are at market rents are very high in demand and would you'd get a premium dollar. So it's just a different spin. I only think this way because here I am in the Bay Area, and that's something that you need to consider. But hotels fit perfectly within this. Also, certain cities, the Bay Area in particular, they've realized the housing crisis they have, so they have loosened some of the zoning restrictions. And that's a big pitfall, and that's what we'll get into in some of these slides, something to really think about. But I mean, just look at these hotels. There's all different, these are just a few things, but really open your mind to the possibilities of what this, where you could place these. All right.
That's a lot.
That might be more than you wanted to know, but.
No, that's okay.
So finding opportunity, where do you find these? Finding opportunity, solving a problem. Here's a picture of our deal. This was a Quality Inn motel currently at 30% occupancy. Mom and pop owners. They could cover the cost of operations, but they couldn't cover the debt service. They could cover one or the other, but they couldn't cover both. Additionally, with hotels, you have the cost of the franchise. So this was a Quality Inn. Choice Hotels is the franchise owner. They had to pay annual fees to Choice Hotels. So they certainly didn't have enough money for that. The demand in this market, there's a lack of rental inventory under $1,000 a month. Definitely these units are needed. Our target rent is in the 8s, the low 8s. Local rents do not support the cost of construction whatsoever. As we said, when builders build, they build A-class construction or B+. They're not messing around with C-class construction like this. So it solves a problem for the hotel owners and opportunity for us.
Gotcha. It looks like a nice area too. I mean,
yeah, this is considered a B-class asset in Sierra Vista. This is Sierra Vista's about an hour outside of Tucson or so, 40 minutes to an hour. What it is, it's a 100-unit Quality Inn motel. We're taking down to 65 multifamily units, 31 one-bedrooms, 31 studios, and 3 two-bedrooms. And I'll show you in future slides how we do this. Purchase price, $1.7 and some change. Rehab cost, $1.7. Oh, pretty hairy. Has heavy lift all over it.
I don't think when we do our due diligence, we put that much in for rehab. I guess some people can, so.
Well, we're one step away from taking a bulldozer to this place, so.
Gotcha. Okay.
Yeah, heavy lift it is. Our rehab timeline's about 6 to 8 months. Projected IRR, pretty close to 18. Equity multiple, 2.42. We like these numbers. Yes,
Yes.
nice. There's lots of room in these deals. There's lots of meat on the bone. They're not for the faint of heart by any means, and an experienced GP is a must, but there's tremendous meat on the bone, which we love. All right, here's the game plan. Exterior improvements, as you saw, it needed paint, landscaping, signage. Have a look at this sign. We're loving this. We're having so much fun with this sign. This is the great thing with hotels. You inherit this massive sign. So, you know, you have a vacancy and everybody within a quarter mile will know that you have a unit available. And, well, your tenants will always find their way home at night. It's pretty large.
That was a question I had because I know you had talked about this earlier, like the zoning and stuff. So the city didn't make you, because it's really a hotel. So if you were going to build an apartment, there's signage laws, like, so you're grandfathered in to their signage, right?
You are. You
That
are.
is awesome.
To a certain size.
Yeah.
But in hotels, you inherit their gigantic sign that was permitted for hotels.
Wow. That's worth some of the price right there. Not the 1.7, but close.
I know. Yeah, this is a mock-up of what we're going to do. We've been having a lot of fun with the sign. Pool renovation is needed. Pretty much need to do the whole pool. HVAC, we're keeping some of the units. Many of them need to be replaced. Doors, I'll get into that. The doors are fun in hotels. You sort of do a door shuffle. You take away some doors, you put in some doors. Windows are needed. This is pretty interesting. This is, you know, in hotels, the second level of the hotel windows don't open up. So we've had to budget to replace all of those windows to opening windows. I guess it was a safety precaution so people don't jump out of windows in hotels. But it's required replacing all of those windows. So we knew that. That was in the budget. Interior improvements, electric. So I'll get into some of these in the pitfalls, but this is a big thing to underwrite for. When hotel rooms, they have sufficient electric for your lampshade and your clock, but they don't have sufficient electric for a kitchenette. So we have had to spend about $130 in electrical upgrades to add the kitchenette. Something to think about as you look at these, because probably in almost all cases you would find that, unless you were buying a hotel that was a suite that had a kitchen, which is a very good play for those looking at hotels, because a lot of the work's done for you there. Plumbing, big cost in plumbing here, major, in fact. Plumbing and fire safety, these two go together. We have had to run a dedicated line of plumbing for fire sprinklers to run in all of the units. It's a cost of about $180,000 to $190,000. So that's a big one to think about. You will almost always have to put that in, and it will be very pricey. Converting units, I'll show you the diagram of how this works out, because I know everybody thinks, well, how do you even do that? I can't even get my head around that. I'll show you how that's done. Adding kitchenettes, what we're doing here also to save costs, since so many of these are small units, 31 one-bedrooms, 31 studios. Instead of putting in a full range, we've added these ovens that can bake, can broil, and can convect. So we've saved a lot in just the features for the kitchen, and a lot in space also. And they have all the same functions. On this deal, we'll be implementing RUBS, as is typical for our comparable properties in the surrounding area. All right, folks, here it is. This is what you're wondering. How the heck do you even do this? How do you even picture this? Okay, So on the right side here, if you look at this photo on the right, this is the entryway, and you will see the door on the left. That door goes to the photo on the left. So remember in hotels, when there's adjoining doors, you open one door to be faced with another door. Then you have to open the door on that side. One of those doors will be eliminated in our design. We'll put it somewhere else. It's kind of the musical chair of doors in hotels. The unit on the right will be the living room. So you will walk in, your bathroom is to the right. That will become the kitchen. Straight ahead, that unit on the right, that will be the living room. This door that you see on the left side will become the bedroom, the door to the bedroom. And here's how it looks. I wish my pointer was working, but or rather could figure out how to do it. But my 10-year-old's in the other room, so you'll just have to bear with me. You walk in. I'll use my fingers, but I don't think you guys could see that. Just you walk straight in, and what would have been a bathroom is now your kitchenette, and you have all the plumbing there, and you have your updated electrical that's required for your kitchenette. You turn to the left. We've eliminated one of those doors. So that door will go into the hallway, which is the hallway to enter the bathroom that goes all the way to the left. Okay. That door that we removed is now put on the bedroom door. So you have your own door to your bedroom, and that's combining two units.
Okay. You're right. I couldn't have visualized that unless you did this. This is good because I'm like, okay, how do you, but you are taking it from 100 units down to what, 65?
You have to, yeah, because they're too small. They're hotel rooms. Our sizes are 369, so 300 and some change square feet for the studios, 600 for the 600 square feet for the one bedrooms, and then 900 for the two bedrooms. There's still a smidge on the smaller side. There's an Army base here and a medical center that will be leaving a number of these furnished. So we think it will be just fine. It's real close to our comparable property in unit size. Here's a mock-up of what a studio would look like too. So you walk in the door, to the left is your bathroom. As almost always in hotels, it's either to the left or the right. In this case, it's to the left. On the other side of that bathroom, there's your kitchenette. We have used the plumbing from the bathroom for the kitchenette.